What's up, everyone? It's July 11th, 2025. Rough day today, man. I think I pretty much annihilated my accounts into Nuketown times atomic bomb times nuclear napalm strikes. So that's great. But it is what it is. I'm in the middle of this Randy Howe course, and I'm gonna try and put a little psychology spin on today's training range because I talked to a couple of you, and some people was messaging me saying they got wrecked as well. And there's something going on here, and it's going to keep happening. I hope it doesn't, but it will continue to repeat itself because the person who studies is not the person who trades. And it's very important for us to gain a observer perspective. The observer and participant is like if you've ever been a witness to your thoughts, that's you observing. And we have to gain that. And then, so let's say we can witness our thoughts, but then we enter the market. We have now just become the participant. So it's like a wave. Imagine a beach. Let me draw something. Imagine this is a bad drawing. Okay, so this is the water, like that. This is the water. And let's say this is the beach line. This is observer. This is participant. This is the person who studies and back tests. This is the person who trades. And if we've ever been, I'm assuming most of us have been to a beach, there's actually no clear shoreline. It's kind of like sometimes the waves are pushing up, sometimes the waves are receding. But this person is not this person. Randy calls this the orphan, the inner critic. He got that from Carl Jung. And what our goal is to train this person here. This is the trader, the participant. And we do that through becoming a very good observer. And it's not as black and white as I'm saying. But in moments like this, I crashed out today. I was trading NASDAQ and then I switched to the E-mini, but I took a quick loss. I scalped out. Took a short here, scalped out. I took a long overnight session, scalped out, took a short, took a full hit. Then I saw this, I was like, oh, we look like we're gonna rally. So I got caught at the 50% mark. Then I was like, oh yeah, gap down, there's momentum. So I went for 50% here, trade, and then I got stopped out again. Then I took the 50% of this trade. And I hit out, and then of course it rallies. So then I talked about in the Discord today, I broke the system one time and all hell broke loose. So I broke the system and I missed the winning trade. And then I bought this bar right here with size on ES. And you can see what happened here. I saw this bar got follow through. So I shorted right here. Now I'm not trading my system. And yeah, that's kind of where I started. Right around here is where I started to lose the plot. You can even argue right here because I did take a little bit bigger loss than I should have. And then I just ping pong short, long, short, long. I was actually short here and I didn't take profits, and then I reversed long here, and then that was that. So all my accounts are gone. I'm gonna have to restart on next week. But what I'm saying, it happened, it's part of trading. I'm still learning. It is what it is. I just want you guys to know where I'm at in my trading. But I had a good moment today right around here. I know I was a little bit late to the party, where I had the opportunity to coach this person. It's really important we can all learn how to coach this. I actually am going to email Randy later this week after the dust is settled and ask him, how can I coach this person without taking a loss? Because while I was winning, the gravy train was rolling. But this annoying participant, the orphan, the inner critic, isn't really there unless I'm losing big. So I've got to talk to Randy to figure out how can I train this person, the actual participant, the person trading, before the losses make me realize what I've done. So I'll bring this up. I put it in the beginning of the video because a few of you messaged me, you got thrashed today. And in my opinion, it was a hard day. I look back on it, and had I just followed the plan, yeah, okay, I take a loss here. There's 3 bars. It is bigger than normal loss. But look, let's say I take a loss there. And then I did take a loss here because there's the bear leg. So I take a loss. Okay, I took a loss. I took about 3 losses in a row, I think. And then I kind of just went haywire. And then here was the winner. But look. You know what? Let's just do the math on why it's more important to follow a system than follow our emotions. Took a loss. And NASDAQ's price action was a little bit different, but it was generally like the same leg-ish. So it's easier to count these points anyways. And that while I'm doing this, I want to give a quick shout out to the members and subscribers. I appreciate you guys sticking with me and following me, even though I'm blowing up accounts. Today was a bad one. Today was bad. The markets got the best of me. I don't know what to say. So I'll be restarting the funded journey again. I got to get some accounts. I don't really have a problem getting them funded. I have a problem right before the payout. If you guys remember, I was trading FOMC a long time ago, and I blew the consistency rule out the water. And then today I started taking bigger hits. And what's crazy is I was past the $3,000 threshold for payouts, but I had to get to 5,000 and like 6,000 on another account. And once the farther away I got from that goal, the more I realized like how much I really effed myself, because now I have such a, like, the target was 3,000 and I was past that. So it is what it is here. So here I would have made 10 points, but I hit out. Let's say I missed that. Here's another winning trade. Yeah, here's another winning trade. Pretty much I lost tilt before I could look at that. Look how many wins are in a row right now. And then here, if I've won this many times long, I'm pretty sure I'll take a loss here because it's long. Put that there. And then here, I'd have time to flip short. I don't know if I would trade it, but if I got filled before, let me see, where's bar 72? I might have. If I was up on the day, I could have been in this trade, and the target was not met. So we'll just say we hold to bar 81, or I'll do bar 80. I have to get out 5 minutes before. Okay, let's do the math. I'm gonna put the chart here, scrunch it up. Okay, that looks good. 9.75. Actually, we have to start at negative 9.75. Negative 7.5. This would be a loss too, but it's positive. Negative 6. So we're at 23, and then now we have this trade plus 10, plus 4.7, plus 5.25, plus 4.75, minus 4. So now I'm counting right here, minus 4. And then let's say we end the day barely up here, and that's plus 5.75. So I would have ended the day up 3 points. I definitely feel like I'm wearing the dunce cap right now. Even with a rough start and a loss here, the system worked. Again, I was the weakest component in the system, so that's nice to know, but it also sucks. It took me losing a decent amount of accounts today. I'm back to 0. So that's that speech. I hope you guys did better than me, and for those of you that did get slaughtered, I hope this is just a little bit of a, it's okay. This is an opportunity for us to coach that trader. The observer coaches the participant. Anyways, I'm gonna do a quick one today. It's Friday. Kind of got thrashed. I'm ready to just take a break. I got to do some membership breakdowns, and I'm gonna do some back testing tomorrow because there's one. I am putting a big back testing setup for like a week now, so I gotta do that tomorrow. I'll probably bang that out. I'll do the membership videos tonight. Do back testing tomorrow. And then I can study quant systems for the rest of the weekend, and then I'll be working on Sunday. So I still got a jam-packed weekend, even if I took it easy tonight. Look, I still like to work, even though I lose. I think that's where the money's made. If you guys watch Andy Frisella, winning and losing should not dictate the amount of output we do. The output has to stay the same whether we win or lose. And that's really why I watch Andy Frisella. I hope you guys take some lessons out of his videos as much as I do. Anyways, big gap down. Bar 1 is follow through. Good for the bears. Definitely tricked me today. I was a bear. So bar 1, big gap down, follow through. Bar 2, bear bar closing right below its midpoint, and then follow through bar 3. This is a trade I would like to take 3 bars in a row with a gap down. I think we could test the low before we test the high. However, we are in our trading range, and now I'm zooming out. We've been above the moving average for the higher time frame moving average. Wow, you know what? We've been above the higher time frame moving average for 160 bars. So this gap down is a fade. That's a day 1 Albrook setup. First gap bar below the moving average is a better fade to the moving average. So there's my price. I got the psychology answer and the price action answer right there. This was a better fade. Bar 3 sells off. Bar 4 sells off and reverses, trapping bears. We can see a tail there. I was a trap bear, but I was trapped up here. And now let's talk about trap traders. Bears are trapped down here. They're gonna have to short more right around here. Well, first they short here. They can't get out break even. So they short more here. Still can't get out break even. They try. And then bar 9 breaks out. Now they're trapped, having to buy back shorts. Strong bears, they're able to short the EMA and they actually got out at break even. So there's my trade on a big scale. I usually don't take a micro channel this big, but today it worked out. So bears short down here, they short up here, they get out at break even, they buy back shorts. Bulls buy front running bulls who bought bar 4, bears who are trapped, and then second leg traders are all buying right around here, and we see a nice rally into the target, into the higher time frame EMA, acting as a magnet. Then we do the same thing again. Bears that shorted down here are going to short the EMA. That's the new high. We're in a channel. We're in a trading range, but it's a channel too. We're channeling higher, but there's a gap down, so price was consolidating. Bears short the low of 22. They short the high of 27. And look, they actually have about 5-10 minutes to make money down here. So that lets us know that although we're in a trading range, although there's bullish price action, bears are making money. They bought same dynamic. Bulls that bought the high of 22. Bears are trapped, and second leg traders are all going to be buying right around this level, the EMA or below it. When you see the EMA, you can add like 5 points above, 5 points below, because it's just kind of like this line is just the average price, and it's not as important as it seems. What's important is the price action. So why did I say that? There's like some sort of force field. I don't know. I'm now. Like, it could be up 5 points, down 5 points. It could still work. I'm explaining this really bad. I'm just going to keep going. Second leg, 3 types of traders are buying this. Retest the highs. It works. And then if you miss that one, you see this micro one here. Bar 32 to the high of 37. Bear short down here. They short up here. They even have time to get out. So if they miss this, they have time to get out on 39. And they buy back. Causes a rally. Now this rally shot up to get its own second leg. Price is consolidating, but since we go for shallow targets and second legs, it's still working. It only doesn't work. I mean, if you were long all day, you would have been making money, but I was short biased because the gap down and follow through. I guess I was trading what I wanted and not what I saw, to be completely honest. I should have stepped away as soon as I bought the 46. It is what it is. Rally, bears short the low of 39 because it looks like it's reversing. Higher low, gap down, looks like it's going to collapse. 50 gives them a chance to get out break even, surges for a second leg. And then once again, that dynamic exists again on 50 and 51. Bears see 3 bars in a row, shot to get a second leg. I was definitely one of those bears. So they short the 50% mark here. Excuse me. They short down here. They're excited. They short the low of 50. They short the low of 51. They're now trapped into a bad trade. They short the previous swing, and right around here is the break-even price. They buy back shorts. Traders, bulls are buying, adding to their winning position, and us second leg traders are adding in. And now we're all made money on the second leg from 61 to 63. On the contrary, bulls have had multiple legs up, finally getting bars above the EMA. Bulls buy up here. They buy more down here at the 68 low. Market rallies, and actually bulls are making money. So this is not the strongest bearish leg down. This leg, deep pullback, testing the high of 63, and then it sells off. The target was missed. Is there after hours on Friday? I'm usually. Oh, look, yeah, it was met. And then we'll see for Sunday. This kind of already got 3 legs. Leg 1, pull back, leg 2, pull back, leg 3, or you could say leg 1, pull back, leg 2, pull back, leg 3. So, what am I doing? Maybe we do something like this. The bulls that bought the 178 high are going to buy lower. Hopefully, get out 50%, and then they sell out for break even. Bulls are selling, bears are adding to their position. So 179, and second leg traders are looking to join the party. If bulls buy here, buy here, and we collect bars above the 50%, we know we're in a trading range, or this is a start to a trend, because now bulls are making money in what we think is the beginning of a bear leg down. So a little bit quicker, put a little psychology twist on it today. Let me know what you guys thought of that, and I hope you guys have a good, safe weekend. We are more than halfway done with the year. Today did hurt, but I'm just going to take it as an opportunity to finish the year strong. I hope you guys have a good one. If you learned something, share a show. Don't be a hoe, and I will talk to you later. Thank you for your time. Bye.